All right, welcome to Talk Tickers. Today, we're tearing down Roku's Q4 2025 earnings, and wow, what a report it was. The numbers dropped right after the bell, and the market, well, it didn't wait to react.
And by didn't wait, I mean the stock immediately popped, up around 12% in after hours. So you gotta ask, what was in that report that got investors so excited? Let's get into it.
Okay, first things first, let's hit the big headline numbers, the stuff that really lit a fire under the stock.
Okay, check this out. Right out of the gate, a massive beat on the bottom line. Their GAAP earnings per share, or EPS, came in at 53 cents. The street was only expecting 28 cents. That's not just a beat, that's a crush. And revenue, they beat there too, pulling in nearly $1.4 billion. You know, when a company beats on both the top and bottom line like this, it sends a really strong message to Wall Street.
But honestly, the real story, the one everyone was watching, is in their platform revenue. Now, that's their bread and butter, the high-margin ad business. It grew a super strong 18% year over year. I mean, this is the number that really matters for Roku's future, and it's showing some serious muscle.
And if you needed any more proof of their focus, look at this. A record $169.4 million in adjusted EBITDA for the quarter. This is Roku basically screaming from the rooftops, hey, we're not just about getting bigger anymore. We're about making money. This is a huge shift from a scale story to a profitability story.
But, you know, just because they're focused on profits doesn't mean the growth story is over, not by a long shot. The CEO said on the earnings call that they are on a clear path to blow past 100 million streaming households next year. So their core asset, that massive user base, is still getting bigger. It's the best of both worlds, really.
So the results are great, but how are they doing it? Let's take a look under the hood at what they're calling their monetization engine.
You know, Reuters really nailed it with this quote. For the longest time, the big question hanging over Roku was, okay, you've got this giant audience, but can you actually make real, consistent money from it? Well, this quarter, with this guidance, it's like they're giving a definitive yes. Okay, let's talk about what really matters to a lot of investors. Cash. Specifically, free cash flow. That's the cash the company has left over after paying all its bills to keep the lights on and grow. And get this. Roku generated a record $484 million in free cash flow over the last year. But the real kicker? Management said they can see a clear path to hitting over $1 billion a year in FCF by 2028. That's a game-changing number.
And that confidence isn't just talk. It's right there in their official guidance for 2026. They're telling the market to expect $5.5 billion in total revenue and a whopping $635 million in adjusted EBITDA. And see that? Platform revenue is expected to keep growing at that strong 18% clip, and they're keeping their margins high. What that means is, as they get bigger, more and more of that extra revenue drops straight to the bottom line. That's called operating leverage, and it's exactly what you want to see.
Now, some of the sharp analysts on the call pointed something out. They said, wait a minute, your guidance for Q1 growth looks a lot stronger than your guidance for the full year. What gives? And management's answer was pretty straightforward. First, Q1 of last year was kind of a soft quarter, so it's an easy comparison to beat. And second, they just have a much clearer picture of the next 3 months than they do of, say, next October. Makes sense, right? Especially with things like political ad spending, which can be a bit unpredictable.
All right, to really get why the stock reacted so violently, you have to understand the mood heading into this report. And yeah, this chart really tells the whole story. In just the 1 month before they reported these numbers, Roku's stock was down nearly 20%. I mean, it was getting hammered, doing way worse than the overall market and even its own sector. The stock was just completely in the penalty box. Sentiment was, to put it mildly, terrible.
And then, bam, overnight, the entire story changed. The whole conversation went from, oh no, we're worried about the advertising market, to, wow, look at this profitable platform machine. This earnings report was a total mic drop moment, silencing all those pessimistic voices.
Okay, so that brings us to the big finish. We've looked at the numbers, we've got the context. It's time for the next call, where we put it all together and give you our take. So what's the call? After a blowout report like that, where does the stock go now? Is the party just getting started? Here at Talk Tickers, our call is an outperform.
And here's why. We're setting a price target of $130. So what's going to get it there? Well, we see two big catalysts. First, you've got a ton of political ad money coming in the second half of the year, and Roku is perfectly positioned to capture that. Second, they're getting smarter with AI and their ad technology, which should help them grab a bigger piece of the huge small and medium-sized business market. Now, what's the risk? It's the same old story, the economy. If the ad market takes a nosedive, Roku will feel it. But honestly, with the kind of operating leverage they're showing and that solid guidance, we think the potential reward here outweighs the risk.
And of course, we have to say it. Please remember, this is all for informational purposes. It is not financial advice.